BYND, guys, going to the moon. That is all the hype here. If you go on Reddit, scrolling on Reddit, anyone who's a trader probably keeps seeing these posts that BYND is going to the moon. And ladies and gentlemen, we did go to the moon from 50 cents to $8.86. It was quite short-lived, but this was a pretty massive move considering the float. And it was mostly triggered because of the rumors for it going bankrupt and pretty much just going out of business. Sales are declining so badly. And this is pretty much a shit company. This company is absolute bollocks, absolute junk. And I even posted it in Reddit when this thing was at like $7 or $8. I saw posts on Reddit that this thing was going, oh guys, we're going to 50 bucks, we're going to 100. This is going to be, the next massive short squeeze, even bigger than Open. As we know, Open had a similar kind of squeeze. However, Open has been holding. So Open, the only thing different between Open and BYND is that Open actually has a story. Open is kind of earlier in its business growth story. People are thinking that Open is going to be the next Carvana. Just a way to easily buy and sell your house without having to do a bunch of things with your agent, and pretty much all just a one-stop shop for buying and selling real estate, similar to what you do now in Carvana. Actually, my dad purchased a car on Carvana, and yeah, I was quite surprised. He said it was really easy. He got a good deal. A lot of people think that you're using Carvana, you're going to get a really crappy deal, but he said he got a pretty fair deal, and the car was in the driveway within the next day after he purchased. So it makes it really easy. So people are thinking that Open Door Technologies is going to be sort of the next kind of Carvana. So that's why it seems to be holding a little bit better, because there's an actual story behind it, and there's people are betting on the future. People are betting on future earnings of this company. Whereas BYND, this has already been kind of solidified. This company has already went through its growth story, its early growth story, early back in, when was this? 2019, 2020. This thing ripped from $40 all the way up to $240. Everyone thinking that, everyone's going to be going to artificial meat. Bill Gates is like, we're all going to be eating bugs. So everyone's going to be buying Beyond Meat. No one's going to be buying actual real meat anymore. Well, this is if you're living in America, I don't think we're ever going to go to artificial meat. America is the land of eating fresh meat, red, juicy meat, juicy burgers, juicy fast food, steaks, ribeyes, ribs, like all these types of different cuts of meat. Americans consume the most amount of red meat probably in the freaking world. I don't think BYND is going to be a successful company. And, it turns out, it didn't do too hot, and sales are declining. This thing was going to go out of business. Everyone thinking, it probably is going to go out of business soon because sales are just so bad. But, everyone is shorting this, into the news. There was some massive news anticipating, coming in October. And, we started to capitulate down into the pennies. We're down to 50 cents. And people think this is going to get delisted and stuff like that. So, people are shorting very aggressively. And then, of course, it comes out with news. It comes out with news out of left field. Absolutely out of left field. Saying that expanded their partnership with Walmart. So just with the name Walmart, it's already going to get a lot of eyeballs. The algorithms are going to be snapping with that word Walmart. Everybody knows what Walmart is, and the algorithms are going to start moving the stock. And as soon as the news drops, this thing's up from 80 cents up to 125. So as soon as the news dropping, algos are already on top of it. And if a lot of people are short, we know what happens. We know what happens when the news and it pushes the opposite direction, price pushes the opposite direction, people start to cover, and it starts to become into a domino effect. And the thing about these companies that are going to go bankrupt is that a lot of the times the short float is more than the amount of shares on the market. And I think that's actually happening again. I think it's happening again with BYND, where currently 160% of the float is shorted again after selling off from 886 all the way down here to about $2. Actually, it leveled off the lowest here around 175. So I wouldn't be surprised if we do see, I wouldn't say a second leg, but a secondary pop. I'm thinking we're going to see a secondary pop. And, after the news kind of, squeezed everyone out, people are thinking this thing has no story. This thing's just a crappy company. There's no way the numbers are going to come back with BYND. They're not doing any sort of pivot or anything with the business. They're not changing anything. Why would the numbers change? And so that's why, people are, again, aggressively shorting this. So we're back down to $2 a share. And I think we can see, shorts have to take profits at some point. And I think that, since dumping from about 886 down to 2, I'm thinking we can get a potential squeeze over this little range here. Even though we broke below, I'm thinking that shorts are going to need to start to cover. And right now, if there's 160% short float, 160% of the float is outstanding, is short, there's not enough room for everyone to take profits. There's not enough shares in the market for everyone to be taking profits, even if they were in a winning position. Let's say a lot of them are in a winning position, currently at 375, 350, and we start failing, and people start covering here. Again, we start to dip back or break back over 275, the bottom of this range here, up to $3, and now their position is going break even or even red on the position. And that's just simply because there's not enough shares at these levels for everyone short to start taking profits. So I'm thinking there's going to be a secondary domino effect. I'm not thinking that this is going to go all the way back up to 886 just because there's no story behind it. But I'm thinking just off the technicals, off of market psychology, and of the fact that, shorts need to take profits at some point, that this is going to have a slight bounce off of these lows. So I actually started selling puts. Selling puts here on Friday as it was selling off. I started selling 150 puts expiring on Friday. And right now, the market hasn't opened, but I can still check. I think I'm up a few bucks on it just off of time decay. So the time decay is working in my favor. And I didn't do too big of size on these puts because, so I'm only up $4 on, I'm only up $4 so far off of time decay. But I sold about 4 contracts. I don't think you're not going to be able to see this. I sold about 4 contracts. It's very small size. So 4 contracts is about 400 shares worth of BYND at $1.50. And I did small size because if you're selling puts, there's 2 things that can happen. You can either just collect your premium and the option expires worthless, which in a situation like this is what I want to happen, because the other option is that I get assigned shares. And so if I'm going to get assigned shares, I'm getting assigned shares of BYND, a failing company, at $1.50 a share, which, short term could be a good price if we haven't yet squeezed out of these levels. It could give me a good kind of cost basis for short-term backside pop. However, long term, probably not going to be in a good position when we start breaking below $1, start heading into the cents, start heading back into penny land. So, ideally, I don't want to be getting assigned on these shares. And if I'm selling puts at $1.50, it's not going to give me room. There's going to be no room for me to roll the position because once you go under $1 a share, the only other options to roll out and down is going to be at the 50-cent mark, or the $1 mark and the 50-cent mark. So it just tends to be too much of a gap percentage-wise for me to kind of roll out and up. Plus, I don't want to be drawing out this position too long. So, I would consider this to be a decent opportunity for a backside pop, but obviously, I don't want to be holding this, turning into an investor like some of these guys on Wall Street bets, which we can take a look at some of these freaking posts, guys. Look at this. Beyond bag holders still buying the dip. Man, like every single post is about BYND on Wall Street bets. A lot of people got stuck in this. A lot of people got stuck. I saw a lot of losses over $100,000, $50,000, $70,000 on BYND. And what the heck? There we go. Okay, so over $125,000 loss on BYND. This guy here buying calls on BYND, losing $120K. That is insane. And if you just scroll down Wall Street Bets forum, it gives you a good idea of how risky day trading is and why you should not be gambling. No selling shit brought for $138K of Beyond Meat. And of all the stocks you could buy in the stock market, you buy a failing artificial meat company. And he's down 56 grand. Jesus. What else we got here? 163,000 on fake meat this week. Oh wow, he actually came out with profits. At least somebody coming out with profits, I think. Yeah, I made 163,000. I'm seeing a lot more beyond baggage right now. When you bought into a stock for a quick flip and it ends up being a community member. This guy's down $400 on his BYND, and this one is when BYND was trading at $5.99. He put 60 grand in this at $6.03. This guy is down a boatload. 40. He's down over 50%. This is why you got to be careful with these types of stocks. And this is why I'm trading small size. And this is why I'm not falling into FOMO and being more. You gotta be a little bit more calculated. You can't just be buying at the top. FOMO if this thing's gonna go to 50 without you. So there's a lot of losses. It's quite entertaining just to be kind of rolling through this, scrolling through all these losses. This guy's down 17 grand on BYND, 25% on his portfolio. I'm sure he's down a lot more today. Now that's trading out close to $2 flat. So yeah, there's a good example of not FOMOing into positions. And I shouldn't be. I think I'm taking a pretty good trade down here with selling puts. I think the risk to reward is there, and as long as I'm in small size, I think it's worth the risk. But if I start, if I'm just gonna YOLO 50% of my account selling puts at 150, this thing could turn into a really, really bad loss. So, with stocks like this, a stock that you're not willing to own, you should not be too aggressive. You shouldn't be too aggressive because, on a different stock, let's say, you're doing this on, American Airlines or Ford. If you're getting aggressive on a position, at least you're more hopeful, or even Apple or any of the tech stocks, at least if you're oversized, there's a good chance that, if you just wait it out, the position, it's going to go back into the green. That's most likely what's going to happen. But if you do that on BYND, the chances are this thing, you'll never see green again for the rest of this stock to be on the exchange. This thing is probably going to go down to 50 cents, 25 cents, do a reverse split it back up to $10, and then selling off again back down to 50 cents, just diluting. While the CEO is going to get his little golden ticket out, and the company's just going to go under. That's usually what happens. So, BYND. I don't think this is going to survive. I don't think it's going to go to 10 or 20 or 30 like people are saying online. So just be careful out there, and always analyze your risk to reward and not falling into FOMO, and not oversizing on positions that you're not willing to hold long term. So that's it, and I will see you guys in the next one. All right, good luck. See you.